If you're tracking the global economy, you can't really miss the whole U.S.-China trade situation. It's a big current right now. We've just seen the U.S. hike tariffs on Chinese goods again, up to, what, 145%? That's pretty significant.
It really is. And China, they've hit back with their own tariffs, which wasn't exactly unexpected.
It feels like another turn of the screw, a ratcheting up of tensions that have been, well, shaping things for a while now.
Definitely shaping international commerce, yeah.
Exactly. And that's really what we want to unpack today. We're diving into this upcoming meeting in Switzerland, high-level officials from both the U.S. and China.
Welcome to Logistics Pulse, sponsored by Mothership. Skip the broker to save big on LTL shipments, or deliver same-day nationwide. For more insights like these, don't forget to subscribe to Logistics Pulse on YouTube, Spotify, or wherever you get your podcasts.
We've been digging into the reports, trying to figure out what this meeting, it involves Treasury Secretary Scott Bessent, U.S. Trade Representative Jameson Greer, what it could actually signal.
I think for you, the listener, the real question we're trying to get at is, what do these high-stakes talks really mean? Could they signal shifts in global trade? And what does that imply for the wider economic picture we're all trying to navigate?
Okay, so let's get into the details. The meeting itself is happening this weekend in Switzerland.
That's right.
And it doesn't seem like just a casual chat. It's being seen by many as a potentially serious step, maybe towards actual negotiations to sort out this trade friction. Why now, do you think?
I think the very fact that officials at this level are meeting face-to-face, it suggests there's a real willingness, maybe even a perceived need, to find some common ground. And Treasury Secretary Bessent, he's been quite blunt lately. He said the current tariff war isn't sustainable, especially, he noted, for China.
He even compared the 145% tariff to an embargo, didn't he?
He did, an embargo. That's pretty stark language. It tells you something about how they see the pressure mounting.
It definitely sounds like a potential turning point, but hang on. The U.S. message isn't about cutting ties completely, is it? I thought Bessent also stressed they want fair trade, not a full decoupling.
Exactly. That's the other side of it. The focus is on fair trade, which suggests they want a relationship, just a more balanced one in their view.
Okay.
And linked to that, Bessent also mentioned he expects these initial talks to be about de-escalation. So not jumping straight into some huge, comprehensive, big trade deal.
More like trying to lower the temperature first.
Seems like it. Aiming for maybe incremental steps, which honestly, in a situation this tangled, probably makes sense.
Yeah, probably. So it's not just U.S.-China talks then. They're also meeting CISPRIS President Corinne Keller-Sutter.
That's part of the schedule, yes. Those meetings likely serve a couple of purposes, maybe underscoring the global significance, perhaps involving Switzerland as a neutral ground facilitator, or maybe just diplomatic protocol given the location.
Okay. And then on the Chinese side, who's the key person meeting Bessent?
That would be Vice Premier He Lifeng. He's basically Beijing's point person for all things China, U.S. economic, and trade. So a really central figure.
Got it.
And U.S. Trade Representative Greer, he'll also be meeting with his direct counterpart on the more specific trade issues.
Okay, so we know the when, where, and who. Let's dig into the U.S. position. What are they actually aiming for here? What's the core stance?
A really key phrase coming from the U.S. side, especially from Bessent, is this idea that economic security is national security. That seems to be the fundamental lens they're using.
So framing it in security terms.
And he's also talked about the overall goal being, and I'm quoting loosely here, rebalancing the international economic system towards better serving the interests of the United States. It's pretty direct about their priorities.
It definitely sets a firm tone. And Greer, the trade rep, he's echoed that too, hasn't he? Saying he's negotiating at President Trump's direction.
Yes, exactly.
With the goals being, what was it? Reciprocity, opening markets, and protecting U.S. security, both economic and national.
That's right. Reciprocity is a big one.
So reciprocity, what does that actually mean in practice? Like tit-for-tat tariffs or market access?
Essentially, yeah. They're looking for what they see as a level playing field. Similar access to each other's markets, comparable rules, comparable tariffs, making sure the terms aren't, in their view, unfairly tilted.
Okay. And President Trump himself, he commented recently that China wants to meet and the U.S. will do it at the right time. Sounds like projecting control.
It does, and he seemed quite dismissive when asked about signing deals immediately, emphasizing that other countries need access to the U.S. market, kind of implying the U.S. holds the stronger cards.
A very strong negotiating posture.
It really highlights the leverage the U.S. believes it has. And it's worth remembering, Bessent said not long ago that the U.S. was talking trade with 17 partners, but specifically not China at that moment.
Ah, right. I remember that.
So this meeting now, it definitely signals a shift, maybe an opening to re-engage directly.
Okay, interesting. So that's the setup. Let's bring in some outside analysis. We looked at what Goldman Sachs is saying about all this. What's their take?
Goldman Sachs is actually suggesting we might see a drop in U.S. tariffs on China fairly soon, in the near term.
Oh, really? How much of a drop?
Their forecast is, from the current levels, maybe around 160% effective rate down to something like 60%.
Yeah, that's quite a cut from a 160 down to 60.
It is. And they also think China would likely follow suit with similar cuts on U.S. goods, which fits with Bessent's talk about de-escalation.
Okay, so is Goldman thinking this is a sign of a big deal coming, or is it more like a goodwill gesture, a way to get talks moving?
More the latter, I
Yeah.
think. It aligns with the idea of just easing tensions, creating a less confrontational space to talk. But, and this is really crucial, even with that potential bit of positive news on the trade front, Goldman Sachs is sticking to their estimate of a 45% chance of a U.S. recession in the next year.
Still 45%. Wow. Even if tariffs come down that much.
Yep, 45%. That risk hasn't really budged in their view.
So what's keeping that risk so high then, according to them, if not just the existing tariffs?
It's a few things woven together. They point out the U.S. could still slap new tariffs on other sectors. Things like pharmaceuticals, semiconductors, maybe even movies were mentioned.
Ah, so the tariff threat isn't gone, it just might shift.
Exactly. Plus, there's still a risk that some of those tariffs that were announced but put on pause, the reciprocal ones, could still kick in later, so that uncertainty lingers.
And it's not just trade policy itself, right? They're looking at other economic signals, too.
Oh, yeah. They're specifically highlighting some worrying soft data, things like a sharp drop in consumer confidence recently.
I saw that.
And also, businesses seem to be guiding their future earnings expectations lower. These kinds of forward-looking indicators, they often dip before the harder economic numbers do.
Yeah, you can see how uncertainty about trade, potential price hikes, it would make consumers nervous and businesses maybe hold back on investment. Makes sense.
It does connect. So with all this swirling around, what about the Federal Reserve? What's the thinking on interest rates?
Good question. Are they expected to step in?
The current thinking, at least according to Goldman's analysis, is that the Fed is likely in a wait-and-see mode for now.
Okay.
They predict the Fed might cut rates, but probably not until July at the earliest. And this is key. Only if the actual economic data, the hard data like jobs or GDP, really starts to worsen noticeably.
So no preemptive cuts based on worries alone. They need concrete evidence of a slowdown first.
That seems to be the expectation, yeah. They're watching the data closely before making a move on rates.
Okay, so let's try and pull this together. For you, the listener, trying to run a business or just understand where things are headed, what are the main takeaways here?
I think the first big one, given all this potential for tariffs going up or down or sideways, is really about flexibility. You need flexibility in your logistics, in your supply chains.
Meaning, don't put all your eggs in one basket, especially if that basket is heavily tied to China right now.
Exactly. Avoid being too reliant on single sources or trade lanes that are super vulnerable to these potential shifts. Things could change pretty fast.
Okay, flexibility is key. What else?
Manage expectations about quick relief. Remember Bessent's focus on de-escalation. These talks are likely the start of a process, not the end. Don't bank on major tariff rollbacks tomorrow.
Right, temper expectations. Got it.
And third, keep that recession risk in mind. That 45% figure from Goldman is serious. So watch closely for any signs of demand softening. Keep an eye on your orders, what your customers are telling you. Be ready for potentially more erratic volumes.
Makes sense. Be vigilant about demand. And what about financing, given what you said about the Fed?
Yeah, be cautious there too. With the Fed likely holding rates steady for a bit, maybe even longer, it's probably wise to assume borrowing costs will stay relatively high for the near to medium term in your financial planning. Don't assume cheap money is coming back right away.
Prudent advice. Assume higher rates persist for now. Anything else?
Just one more thing, sort of strategic. Pay attention to the overall messaging from Washington. This repeated theme about the U.S. not needing to be dependent on China, the focus on fair trade, it suggests a potential long-term goal of, well, reducing reliance on the Chinese market.
So think longer term, too.
Yeah. It might be a good time to seriously explore diversifying where you source from, look at alternative suppliers, maybe different trade routes entirely. Think about reducing that concentration risk over time.
Okay, that's a lot to chew on. So let's try to summarize. These upcoming talks in Switzerland, they look like a significant step maybe towards easing the US-China trade fight, but it's just a step. No guarantees of immediate big breakthroughs.
Definitely the start, not the finish line.
Right. And meanwhile, the broader economic outlook, still pretty cloudy. That risk of recession is real and needs watching.
Absolutely. Significant uncertainty remains.
And maybe, just maybe, we're seeing the early signs of a longer-term shift in how the U.S. approaches its trade relationship with China.
It certainly feels that way. Which leads us, I think, to the final thought for you, the listener. Given all of these complex dynamics, this uncertainty, this potential long-term shift, what proactive steps can you start thinking about now? How can you build resilience and navigate what looks like a pretty fluid global trade landscape ahead?
Something to definitely mull over. How might these shifts impact your specific world?
For more insights like these, don't forget to subscribe to Logistics Pulse on YouTube, Spotify, or wherever you get your podcasts.